I'm looking it over. I took a bunch of notes because if I write it down, then sometimes I remember it better.
Okay.
I don't have any questions that I'm aware of. I took really good notes also.
Okay.
I think this is
Well,
going to help a lot, though.
well, that was the intent. I really wanted you guys to be ready for the test, because a lot of people don't even think about those things.
They don't. No, I didn't.
I mean, most people are just like, well, I was cramming for the test the night before. Yeah, why? And they're like,
Yeah.
and they end up making that mistake, and they hurt themselves more than they helped themselves.
Christy used to teach us fun little things like writing your notes down in blue ink, or the color paper you use, things like that.
Yeah, there is actually a couple of things you can do that's kind of funny. It's if you are, well, you can't take these things into this particular test, but a lot of times, this is really, you do associate things with, your brain actually will associate smells and tastes and things like that while you are learning something. And so, yeah, peppermint's a big one. So if you have something like a diffuser going while you're studying, and then right before you actually take some of those oils with you and smell it right before you go in, it'll help you remember things that you were learning at the time, because it will actually help you recall them. Your brain recalls the same things that you were learning when you have those things. And most people don't realize your sense of smell is one of the most potent things you have. And so that's a learning technique that a lot of people never actually use. But in this testing environment, because you really can't do something with it, I mean, I suppose you could actually put it on your shirt or something like that, put it on your collar, so you put some of the oil there. Or if you have a particular perfume or something you wear while you're studying, it'll help if you wear it if you wear it during the test. It will help you recall.
It won't help people that are sensitive to perfumes.
That's true. So
yeah.
Okay.
I mean, being in the room with all those perfumes would be
somewhat distracting, yeah.
Yeah.
So, but I just wondered if you guys had any other questions.
I mean, essential oils are a little different animal, because perfumes are generally synthetic and they have a lot of toxic chemicals in them.
Right.
That people react to.
All right. So, no questions from yesterday's?
Nope.
All good stuff.
Awesome. All right. So let's recap the first part of yesterday's, the filing requirements. Okay. There are a couple of things. The hardest thing usually is when you first sit down with somebody new, you have to realize you're going to be asking them information that they don't necessarily, it feels a little uncomfortable sometimes to share information with you of this personal nature. So you have to gather some information that is a little uncomfortable for them. And you have to get past that with them. And if you can successfully do that, you'll really do well. Okay. And that's one of the hardest things to learn, because on the tax form, the very first thing, the whole first section is pretty much personal information. And that's the section you have to complete, where it's often the most difficult. And sometimes it is, because some of those people are jerks and they don't want to tell you this stuff necessarily.
Well,
they just want you to do the taxes.
But can't you explain that if you want to do your taxes at all, this is part of the whole thing that has to be done?
Yep. Yeah. And actually, that's one of the things that you kind of learn over time. And one of the things that actually works really well is have a couple of icebreakers that you know personally that work for you. Learn them ahead of time. Learn a couple of icebreakers for people that you're new with.
For example, can you give us an example of one?
Well, it's kind of like, asking somebody what did they do this weekend?
Oh,
Okay, or oh, this movie just came out. Yeah, so I just went to the movies this weekend. You know, tell them what you did, or I just went camping this weekend. I just went to a vacation here. So, have you ever been there? And get them talking a little bit. If they talk a little bit personally about themselves, then they'll start feeling free to talk to you about their personal information, about their detail information. Okay. Now they realize usually that they have to give you some personal information, but if they've been with you a while, they have no problem giving you that information. If they're brand new to it, sometimes they're a little bit iffy about giving you personal information. They want to just hand you a W-2 basically and say, fill this out for me. Okay. And you can't always do that. You do have to ask them some personal information. And here's the hard part. Remember what I said? There's a big difference between facts and truth. Okay? Because what is a truth to them may not actually be a fact. Okay? What are the rules about the Earned Income Tax Credit, EITC?
Which rule?
Some of the things. What are
so
some
many.
of the? That's what I'm saying. There's a whole bunch
Have
of
to have a
rules.
social
But
security number.
there you go. That's one of them. You have to have social security number. They have to live with you. They have to be related to you. They
Within the income limits.
Uh-huh.
No kids, you got to be a certain age.
Uh-huh. So there's a whole bunch of rules for it. Now, that's worth a lot of money, isn't it? When you think
Yes.
about it,
Yep.
that's worth a lot of money to people. You think there are people out there who are willing to lie to get that money?
sure.
Okay. So I want to get that earned income credit. So am I going to lie to you to get that credit?
You're gonna try.
I'm going to try. Okay. In a lot of cases, I'm going to try. I'm going to make that be my truth. Well, they lived with me for most of the year. Well, did they live with you all year? Well, yeah, they did. And then you start figuring out, well, did they live with you all year?
Yeah, I had to switch my spiel. I
See?
asked people specifically how many months, not did they live with you all year? No, I asked how many months. And
There
he's
you
gonna
go.
Tell me.
See, you start to learn how to do it. The gathering of information is really important. And when you start doing it, it's especially hard when you're talking to somebody who is not necessarily from here. When we're talking about the citizenship issue, so are those kids legally here, or do they have I-10s? Maybe their one parent is from here and their one parent isn't from here. Okay. Then all of a sudden you start going, okay, so are they a legal citizen? And you start having to gather information that they don't necessarily want you to know. Okay, because like I said, is that worth a lot of money?
And there's some cultures that, I mean, like the Hispanic culture and the Islanders, they call them wives, but they're
They're not
really
wives. Nope.
So I changed my spiel there too. I say, are you legally married?
Are you legally married? There you go. Here's the other one too. What happens when you have the two same-sex partners, and where it comes to, are you legally married or are you a domestic partnership? Because then it becomes an issue too. Because there's a difference between them when they're just together or if they are legally married.
Right.
And then all of a sudden you start coming into issues, things like that. And it starts getting uncomfortable when you have to start asking them questions like that. And you're not trying to be mean about it. You're not trying to be, racist or sexist or anything like that. You're just trying to get the information that you need for the return, because it's what you have to have.
Since the feds changed the law on that, I haven't had any of my same-sex couple clients do registered domestic partner. They've all just done married.
Right. So
Better benefit.
Yeah. So you end up with that somewhat awkward question sometimes when you have to ask a question that people don't necessarily want to answer, even don't know how to answer.
So
Because
do you guys ever ask the question, the one where you can't live illegally, you can't cohabitate. Do you ever ask that question? I never ask that question.
No.
There you go.
Not.
Well, nobody ever really does.
I mean, it's part of the law, but I don't think it's any of my business.
In Oregon, is it?
Yeah, cohabitation's illegal.
Cohabitation's illegal.
You can't live as if you're married without being married.
You mean if somebody lives with their boyfriend, then they're not?
Correct. And
They're
that's
not legal.
why the tax laws say unless it violates local law, which in Oregon that would be violating local law. I never asked them.
Okay, so that means in that case they couldn't do it as married filing joint, or whatever.
No, like you couldn't claim your girlfriend as a dependent if you are basically like having sex with her.
Oh,
that's what that means. But
because you're actually in a relationship with her.
Yeah.
You see, you're not technically just their dependent. You're actually having a relationship with them.
okay. So I know people come in and say, "Oh, I supported everybody," and then they put the girlfriend as a dependent. So we can't. We have to tell them that's
technically not legal.
Not legal.
But do you ask the question? See, if you don't know it, or what, if they're going to lie, think about it. If I know that that's worth more money to me, think about it. What's going to happen? If they're a dependent.
So how would you do that? Do we say, "Oh, so you guys are married"?
They're not married.
Yeah, I wouldn't. I mean, what's the ethical issue there? I mean, if they say that I claim my girlfriend, I mean, I'm not assuming that they're doing anything.
Nope. And that's just it. In truth, you really don't want to make that assumption because it's not. I look at it this way: is it really my business to find out?
So then, what do you do? Do you just say, "Well, that you can't take her as a dependent"?
I don't say anything. I just go on with the dependency.
You go on with the dependent because there are certain things. There are certain old laws which are in effect, which are not enforced. Okay, think about it. Marijuana technically is illegal federally. Okay, it's only a state law that makes it legal. We Oregon we don't enforce, the federal government does not enforce the marijuana law in Oregon. Okay, well, Oregon is not enforcing the cohabitation law. Okay, face it. Fire engines, no vehicle in the city of New York can be red. Okay? Yeah. There is a law in New York that no vehicle can be red. Only emergency vehicles can be red in color.
There's an old law in like Massachusetts that says, I believe it's the boys can get married at 12 and girls can get married at 13. And
there's a lot of states that actually have
that might be, because I looked up, I was like, why does the profiler keep asking us when as soon as they're 12 whether or not they're married? And so I looked up states.
The reason is because actually a lot of states actually do allow child brides with legal, they actually either have to have a parent signature or Oregon allows it at 16 with a judge's signature or 17 with a parent signature.
I think Massachusetts was the youngest one I saw.
So yes, you can have you can be married at 16 with a judge's signature and 17 with a parent signature. Actually, if you're emancipated, you can be married as young as 14 if you become emancipated. So, I mean, face it, we had brides at 12 when, 200 years ago. So it was normal to get married at 12 years old. But this is, personal information that you have to gather that is uncomfortable to gather, but you do need to know it. And what are, the biographical information that we need to get sometimes is difficult to gather. Okay.
Yeah, especially the one where you have to ask if a child died in the year. I don't ask that.
Yes, that one is a little bit hard.
That's really hard. I don't ask.
Or when you have to basically almost ask the person, are you deceased? Because technically you have to find out if they're living or dead. Are you blind? There's They're sitting in front of you, and basically you have to find out,
Right.
are they blind? Are they disabled? Are they, you know?
Yeah.
Technically, you are supposed to ask that.
Mm,
But
it can be tough.
it can be tough to ask these questions. But you have to have this information because you have to determine, number one, if an individual is required to file, and second, if the individual should file. Okay, because there are cases where the individual doesn't necessarily need to file, but maybe they should. And again, maybe they shouldn't, because in some cases, it's not beneficial to them. All they're doing is paying a fee to report something. Okay, it may cost more than the refund than they're actually getting. All right, they're getting a refund of $30, and it's going to cost them $150 to get that $30 refund.
Right.
Is it really worth it?
Mm-mm.
Okay, especially if they're not required to file.
Yeah.
Okay, should they be filing? That's a good question. But here is some of the things that you have to, that you are required basically to learn. Number one, their citizenship and residency. What country are they from? Are they actually a citizen of the United States or of a different country? Okay, and where do they actually live? Where do they reside? What state are they in? Here, that's a big one. Most people don't realize that living in Oregon and working in Washington, or living in Washington, depending on what you're doing, living on the border of two states, especially two that are as different as Oregon and Washington are, you're insane to live in Oregon. You live in Washington, you work in Washington, and you shop in Oregon. Okay? That's the best way, because Washington has much lower property tax. Washington has no income tax. All right? And Oregon has no sales tax. So, great. You know, you're nuts to live in Oregon, and I own property in Oregon. My family.
Some places are astronomical to live up there.
Well, depending on where you're at, too, if you want to go live in Redmond. But no, overall, the property taxes in Washington are nothing compared to Oregon. Also, the actual city ordinances in Oregon are insane. And I know, I was born there. I grew up in Oregon. Okay? I wouldn't want to live in Oregon anymore just because of the city ordinances.
Where do you live?
Vancouver.
I live one house outside
Washington?
the city.
Yeah, I live in Washington. Much better. The city ordinances are a whole lot better than in Oregon. And I know, I was born there. I went to Clackamas. It's like I grew up in Happy Valley. So, yes, I understand Oregon law. I know that you don't necessarily, there are laws based on where you live and what you do that affect how much you're going to have to pay, what you're going to have to pay, and what you do. So, living in certain areas, knowing your residency, that affects everything. Okay? The next one is your date of birth and your age. I hate to say this, but if asking a woman her age, hold on a second here. We'll let this truck go by.
But in Profiler, once you put in the birthday, it'll tell you their age, so you don't really have to flat out ask them.
Yeah. But that's only if they're not a new if they're a new customer, you got to start asking them this question. And
well, I just put in the birthday.
Yeah.
Your driver's license, I put in the birthday. You're 72.
72 years old. There you go.
Whatever. We'll talk about the
and here's the one.
Later.
And here's the one that actually some people debate. Their marital status. Okay. There are some people who actually debate if they're married or not. Well, I'm not with him. Okay. That doesn't mean you're not married to him. Okay. There's a big difference between being separated and being legally separated. There's a big difference between married and being divorced. Okay. Those are all different statuses. Okay. Being separated and being legally separated are two entirely different things. Gesundheit, Linda.
Bless you.
Bless you. But
So I have a question. When somebody has been separated for 10 years and there's no kids left at home, they're still legally married, right?
they are legally married.
So they can't file single.
Nope. Does not make a difference. They can have been
Yeah.
good. There he's going down the street. They can have been separated for 30 years. Okay. Now here's the other version of that, by the way. If they've been living together for 15 years, guess what? Still there's not married.
Not in Oregon.
Not in Oregon. Not in most states. There's only, I think, 8 states, I think is what it is, that actually count it.
Left have the common law.
Common law marriages do not exist in most states.
Okay.
So when you think about it, it's like, hey, it does not count even though you have been living with. My dad has been with the woman he is with for the past 29 years. 29 years, I guess, something like that. And you know what? He swears he's never getting married again. He was married to my mom, and that was one time he was married, and that's it. He's been with this woman for 29 years since then, but they're not married. Okay? They're not married. Sorry.
Yeah.
You know, so, no matter what, no matter if they have been together for all those years, they are still not married. And some people have this thing that, oh yeah, I'm married. We've been together all these years. You are not married. Do you have a marriage certificate? Has it been recorded? That's what determines if you are legally married. Most people do not realize that there has to have been a recording for there to have been a legal marriage. I've married
They're
about...
legally separated.
There has to have been a recording of that separation.
Right. So how can they file single then?
They can file separate then. It's basically a single, more or less, but it's more or less
separate?
Until they have a divorce.
Until they have a
divorce
divorce
decree, they still have to file married filing separate.
Yep.
You're saying.
Yep.
Okay.
So, but like I said, I've married about 30 couples. 30 couples, something like that. And it doesn't count until I actually sign that marriage certificate and it gets recorded with the county. Then it's legal. Okay. At that point, once it's recorded with the county, then it's a legal marriage. But, you know, it takes that certificate to be recorded.
I know there are situations where if somebody's legally separated.
Legally
I had a judge
separated.
try to argue that with me.
What's
I was
that?
like, well, the whole "are you legally separated?" He's like, "There's no such thing." And I looked it up later, and there are in other states.
There is a legal separation, but it takes a required filing with the county that you are not divorced yet. It means your property. It means you are no longer together, but your property has not been divided.
And is that an Oregon thing? Because he was adamant that it wasn't an Oregon thing.
No, it's really not necessarily. It's by state, but it's recognized by virtually every state, because you have now made an official recording that you are separate. Okay, that you are no longer with this person.
There is a question in Profiler that asks if it's a legal separation.
And where is that? Yep. I'm trying to remember. Where is that?
It's under the Profiler, right at the very beginning, under your personal information, when you're going into the marital status.
Okay.
I don't know what.
Are you married? Yes. Are you legally separated?
Yeah.
That's where it is.
Yeah. So if you say yes, they're legally separated, do you guys know what Profiler does then? Because I've never had
You know,
anybody that.
honestly, I have no idea. I've never had anybody.
Have you, Beth?
I tried to ask yes to that one time, and I think it just went through just the same and then kicked you into head of household quicker.
Yeah, okay.
Didn't
No,
have to.
I don't. I don't.
So they
know,
have to
just-
be legally separated for head of household?
No,
No.
no. Considered unmarried for head of household.
Yeah, considered unmarried.
And it's legally separated could be considered unmarried.
Oh, I see. That's one of the categories it works.
Yeah, that's why.
Right.
It has it in there.
So those are important to learn. Now, here's the other one: is when you're talking about the citizenship and residency, there's really only 3 categories you will ever fall into. Okay, they are U.S. citizens, aliens, and which have 2 categories under themselves: resident aliens and non-resident aliens. Are 3 categories, and dual status taxpayers. And then actually there's one more category which should be listed here. That's the U.S. citizens, the aliens, and the undocumented. They're technically not listed here, but the undocumented can file taxes now in some states. Okay, they have to get an I-10. All right, but if they are an undocumented, I don't even want to call it undocumented. It's really if you're an illegal alien or whatever you want to call it, okay, here in the States illegally or without papers or however you want to put it, you can, if you are required to file for whatever reason, you've been here for however long and you're filing your taxes, and you're trying to get legal status, okay, this does happen, especially people who are trying to gain their citizenship or gain their immigration status, they will be filing their taxes. To do that, they get an I-10, and they will file their taxes just like a normal person, and it ends up with an I-10 number, and they will be of illegal status, but they fall under the category of a resident alien, but it's an undocumented resident alien. Okay, so there is really one more. So there's aliens and there's the undocumented aliens, but they're very rare that they come in and pay their taxes. But the only time they really do is if they're actually trying to gain citizenship or gain immigration status.
They come in to get their refunds.
Yes, they do. But that's sometimes a problem because then they actually end up often admitting that they're not documented, and they end up sometimes in trouble as a result of it. So, what is considered a U.S. citizen?
Born and raised here.
Born and raised here. That is very true. There are a couple of other exceptions too, because a lot of times people are born in other countries to U.S. parents because they were born abroad. They are still U.S. citizens, but it's because their parents were abroad when they were born, but they're still U.S. citizens. So being born abroad does not mean that you cannot be considered a U.S. citizen if you're born of U.S. citizen parents. And even if that means one of your parents is a U.S. citizen. Okay. What about the other categories then? So U.S. citizen means you are connected by a birth parent to the United States. The other case is if you are born in the United States. Now, this is a status that is actually under debate right now, if it's going to be continued or not. But right now, if you are born in the United States, even if you are illegal, if you're from illegal parents or whatever, if you're born here in the United States, you are now considered a U.S. citizen. Okay. Aliens. Resident aliens? I'm sorry.
If they're born to illegal aliens, and they're a U.S. citizen now. You said they were discussing that. Are they thinking of changing that?
Yes,
Trump wants to change it.
Because they actually want to change that status because they're from illegal aliens that are here.
And they want them, the
They
child.
want to remove that because they're actually an anchor baby then at that point.
Yeah.
That gives them a connection to the United States, which prevents their deportation of their parents when they are, the only reason they're here is because of two illegal parents. Okay, if
So
one of
they
them
can't,
is illegal.
their parents, so you're saying their parents can't be deported then?
Once they have a U.S. citizen child,
Okay.
no, they cannot, because then they have a U.S. citizen child. So that is one case where you may actually have taxes from illegal aliens when they have a legal child. Now, resident aliens. What is technically a resident alien?
They live here.
Uh-huh.
They have a green card.
They have a green card. It means their actual country of residence on file is the United States. They are actually a permanent resident here. Okay. My wife is a resident alien. It means her birth country is the Philippines, and she's a citizen of the Philippines, but she is a permanent resident here. That she has immigrated to the United States and can gain her citizenship here, become a citizen of the United States if she chooses. That's what a resident alien means. She has her green card. It's not actually green anymore. It's actually blue, but that's what it is. Now, a non-resident alien. What is a non-resident alien?
Here with a passport or visa.
There you go. Perfect. A tourist. That's just a person visiting here. They're not actually here to stay here. They're here visiting. Now, what about the dual status taxpayers? Technically, Shell and I are dual status taxpayers, not resident aliens. So what's a dual status taxpayer? Ideas?
As a connection to two different countries.
There you go. It means
you
that
or
we
your
actually
spouse have connection to another country.
That's correct. It means that our citizenship, because I am married to a native-born Filipino, I actually have an ACR, which allows me to stay as if I'm a permanent resident alien of the Philippines. So I can go over there and stay. Okay. She is a resident alien here. Okay. So we have a dual status. Now, there is no such thing. All those people who say, well, I've got dual citizenship. No, the United States doesn't recognize dual citizenship and hasn't for like 50 years or something like that.
Right, but some other countries will recognize dual citizenship in their country with the U.S.
Yeah, but it doesn't count. The U.S. will not allow dual citizenship. So they'll try to offer it, but if they have U.S. citizenship, the only way they can actually have citizenship in another country is if they denounce their U.S. citizenship. We will not allow dual citizenship with any other country. So even though the other country says they will observe it, it does not make a difference. The United States does not observe dual citizenship with any other country. So we do not observe it at all. So the U.S. won't allow a dual citizenship. So it's pick one or the other. If you want a citizenship in another country, you have to denounce your citizenship to the United States. You can have the dual status, like Shell and I do, but you cannot have an actual dual citizenship. Now, this is what's really important. U.S. citizens and resident aliens are subject to the same filing requirements. In other words, we have the same thing. We have Social Security numbers or I-10s, and we file the exact same way. We are treated for tax purposes the exact same way as a resident alien or a U.S. citizen. Okay, doesn't make a difference. We handle our taxes the exact same way. All right. Now, different rules apply, though, for non-resident aliens and dual status taxpayers. Okay. The dual status taxpayers, now, in our case, we do have foreign taxes that we have to pay in the Philippines because we do own property in the Philippines. We own houses over there. So you do have such thing as a dual status taxpayer. That means you have foreign income if you have an occupation over there, or property or rental income from over there. And in some cases, you have to handle it differently because if it's not counted for, here's a key thing. What happens if you have income in a foreign country and it's technically not taxed by that foreign country?
It's taxed here. You're taxed on your worldwide income.
Thank you. It becomes, it's actually considered U.S. income if the other country doesn't tax it. Even though it's income earned in a foreign country, it becomes, it's called repatriated. It becomes U.S. income.
What's that? Okay, how do you spell that word?
R-E-P-A-I, I can't even remember. Repatriated.
Oh. Like
it becomes a patriot.
Right.
It's repatriated to the United States.
And then there are tax treaties. So if they do pay tax in another country, sometimes they can, because of the tax treaties, they can get credits.
Correct. So that's one of the things you have to consider is if they have dual status or if they have non-resident aliens. Non-resident aliens are taxed at a different rate. They're even withheld at a different rate. Okay. So that's an important thing to know, especially with the withholding. Okay. So here's some important rules to learn. Generally, a taxpayer's age on December 31st is used to determine how old they are for the tax purposes. Okay, that's the simple rule. So if you are 75 on December 31st, you're 75 for that tax year. Okay, if you're 30 on December 31st, you're 30. Okay, that's pretty much the basic rule. So to determine a taxpayer's age for the tax years, simply subtract the year that they were born from the current tax years. So there is one exception. The taxpayer may be considered 65 on the day before their birthday only if their 65th birthday is on January 1st. So if they're going to turn 65 tomorrow and it is December 31st, guess what? They get to be 65. That's it. That's the only exception. They give them that one exception. That's the only exception there is for your 65th birthday. I don't know why they make that exception. I guess they figure you're going to retire, but I don't know too many people who get to retire at 65 anymore. Okay, even Social Security pretty much doesn't kick in at 65 anymore. Okay? So, let's take a look at this. So Julie was born December 2nd, 1975. So if we consider this for the 2018 tax year, minus 1975, she's 43. Pretty straightforward.
Mm-hmm.
Dennis, who was born in 1954, so for 2018, 2018. Okay, minus 1954. So again, he was going to be how old?
65.
65. Because we give him that 1 year if he was born on January 1st.
Okay.
That's the exception. Because he was going to be 65 if he was born on January 1st. Okay? All right. A couple of quick checks. So, before determining whether an individual is required to file a return, you need to know if they are what? Male or female? That could be an interesting check. I think we'd actually probably either get slapped or sued for that one. You know, employed or retired? Possibly. Renting or purchasing a home? A U.S. citizen or an alien? I'd say probably that one.
Yep.
All right. U.S. citizens and what follow the same filing requirements? All aliens?
Resident alien.
Resident aliens. That was good. All right. Pablo was 17, was born in the United States. His parents are 40 and 42. Both are Australian citizens, were visiting the U.S. when Pablo was born. They have been living in the U.S. for the past 7 years. Is Pablo a U.S. citizen?
Yes.
Or what I said. He was
Yep.
born in the United States, even though he was, they were both not U.S. citizens.
According to the U.S., he's a U.S. citizen and not an Australian citizen.
That is correct.
In Australia, they might still consider him a citizen.
They would try to, but they can denounce his U.S. citizenship and say that he is an Australian citizen.
Hmm.
But that's an important thing to know. His parents, both even though they were Australian, he was born here. So he's a U.S. citizen.
I think that's actually in the Constitution.
Yes, it is. And that's why they're trying to change it.
Wasn't it because of slaves or something?
I don't know what the meaning behind it was, but So Gabriella was born on December 22nd, 1991. How old is she for 2018? So let's take 2018 minus 1991. Anybody got that one?
27.
27. All right. So Donald was born on January 1st, 1954. How old is he for 2018?
65.
65. Thank you, because that was the exception one.
Mm-hmm.
65. We give him that one so we can make him older. Why? I'd always want to be younger. I don't want to ever be older. So what?
Well, there are benefits when you turn 65.
Turn 65,
like the special medical, whatever.
I realize that. That would be one of the only reasons I want to be older. So a taxpayer must have what to file a tax return? An ID, a passport, a refund, or a spouse? A spouse would be interesting. A refund, I wish. So a lot of people don't have a passport. So let's do this way. Let's do this for our knowledge check. Let's do this using our test taking abilities. Let's not do this knowing the answer. Let's do this based on our test taking abilities. A taxpayer must have what to file a return? Let's say we don't have any idea. Well, we know that you can't necessarily have a spouse because there are a lot of people who are single.
Mm-hmm.
So we can eliminate this answer. Yeah, we know there's a lot of people who pay tax who don't get refunds, right?
Mm-hmm.
I mean, that makes no sense. So we've eliminated both those. Well, there's a lot of people who don't have a passport. Okay, you can't ask. There's hundreds of thousands of people, millions of people who don't have a passport. So I don't know the answer. I just eliminated this one, this one, and this one. So guess what? I know without a doubt this has to be the answer. because I know these three can't be the answer, right?
Mm-hmm.
So even if I don't know what the answer is, I know it can't be these three, right?
That only leaves one left.
That only leaves one left. So does this mean this has to be the answer? No matter what, it means that has to be the answer. Not because I knew the answer, it's because I knew the others weren't the answer. Okay?
Yep.
So all right, let's try this one. If a taxpayer is not, look at what he says here. What was the important word here?
Not.
Not.
Absolute.
If a taxpayer is not eligible for a Social Security number, they can
Negative.
apply for what using a W-7? So, the first thing you think is you can say, well, maybe a waiver or an exemption. Well, you know that they can't apply for a Social Security card because they're not eligible for the number, so we know it can't be this one, right?
Right.
Let's do our test stuff again, right? Let's do our test stuff. We know that they're not eligible for Social Security numbers. They can't get a Social Security card, right? So we know it can't be the bottom one.
Right.
So we know it could be any of these three. So we're down to a 33% chance, right? Well, it doesn't make sense because you're not really a waiver and exemption are pretty much the same thing, but that's not an official thing, right? That's just kind of like asking for a waiver and exemption, but this looks like an official thing, right?
Mm-hmm.
So this looks like SSN I-10. This looks kind of like the same thing, right? So if I'm going to make a guess, just making a guess, right? This is a SSN number. This looks like an SSN kind of number, right? As something number. This almost looks like the same thing as this. So if they're not eligible for this, maybe they'd be able to get this. Because waiver just looks like a word that would fit in here. Or an exemption. Well, that makes no sense because both of these would be true then, right?
Right.
Because you're saying a waiver and exemption are basically the same thing. An exemption or a waiver? That makes no sense. They're the same thing. So I can't guess either one of those. We know that they can't get a Social Security card because they said they can't get this. But it really can't be these two because they're the same thing. So it has to, by just our elimination, without knowing the answer, it has to be that. Now do you guys see the test-taking skills?
Mm-hmm.
That makes sense.
Okay. It was because a waiver and exemption, aren't they the same thing?
Mm-hmm.
So by looking at that, you know it can't be A and B because it would be A and B. You'd be going, wait a minute. So I got to flip a coin? Is it a waiver or an exemption? They're the same thing. I know it can't be both of them. So it's got to be this one because they said they can't get this and it can't be both of these. So it's got to be this. And that's without even knowing the answer. Okay. Indicating the taxpayer wants $3 to go to the presidential election fund will, I don't know, I never give it to them.
Me either.
Increase the amount of the tax owed. Yeah, probably in the end it would because whoever gets elected will make the taxes higher. Have no effect on the amount owed or the refund. Probably. That's what they're going to say. Decrease the amount of the refund. Increase the amount of the refund. Well, probably won't affect, especially if you're not getting a refund. So here, let's do our thing again. Right? Number one, this is saying increase the amount of tax owed. Well, that makes no sense. Because what if you don't owe a tax? You're getting a refund. Well, this is only saying one side of it. This one, decrease the amount of a refund. Increase the amount of a refund. Well, what if you owe taxes? Again, look at this way. This is one side. This is one side. This is have no effect on the amount owed or the refund. This is saying it's not going to affect either side. This answer, just by the way it's worded, is telling me, wait, okay, that would make sense. These don't make sense just based on the answer type. Do you guys see that?
Right.
Yeah.
I see it. But also, even when you get a refund, you owe some tax. It's just you had enough refund
To
that
cover.
when they took the tax out. So in a way, when you look at the increased amount of tax owed, that could be true because
Could be.
your refund might have been greater than what you
But you're
owe plus
overthinking.
$3.
But you're overthinking the question. Remember what I said about going back and rethinking the question and adding more to it?
Oh, well, I was just trying to.
You're finding an exception.
Well, I was just trying to follow your
I know.
your rules. So there.
I know. No, I know.
I know that it doesn't change your taxes.
I know it doesn't
because
change
it says it on the form. It
Right.
says this
right.
will not change your taxes.
This, just based on not knowing it, is saying this answer makes the most sense.
Yeah.
So who
Based on the
actually
answers.
pays the $3?
Actually, I always check it.
It's supposed to be just you're saying I wanted to go to it out of the U.S. funds is what it's saying, but
they get it anyway.
yeah. So yes, it's not supposed to have any effect. But again, like I said, just using the test taking skills.
Yeah.
So, all right. Many factors come into play when determining an individual is required or should file a return. Okay? There's some interesting things. Now, what are you looking at when you should file a return versus is required to file a return?
Should would be how many benefits you can get, like credits or refund.
Deductions, and in our case, we have a second one too. Are they going to get a state refund? Because it may not just be, maybe
Right.
their Fed is, maybe they owe to the Fed and they're going to get a state refund though.
Well, if they owe to the Fed, then they're required to file, right?
But that's what we're saying. Not, or if they're at zero to the Fed is what I'm saying.
Okay.
And they're not going to get anything back from the Fed, but they're going to get something back from the state.
Mm-hmm.
It's
but
like,
isn't Oregon one of those states where if you're required to file the Feds, you're required to file Oregon?
You're required to file Oregon. Yep. So, but if you're getting a refund from Oregon and you're getting nothing back from the Fed, technically you wouldn't necessarily, you'd only be filing to get the refund back from Oregon under certain cases. Well,
right. If you were under the filing requirements for the Fed, you might not be under the filing requirements for the state.
Oregon, for the state. So you have to look at the state requirements and the federal requirements in this case. Because like Washington, there is no Washington state tax. So they don't care. They're taking it out of your sales tax. Which is why I said, go shop at Costco. That Costco right there on Airport Way, right by Airport Way, and all those shops right there, why do you think they built them right there?
Okay, you mean up in
Jansen
Portland.
Beach and all that stuff right there? Why do you think they're all built there? They were built there for a reason. Because everybody goes there and shops there and then goes back across. So, first thing, identify the taxpayer's filing group. What does it mean, filing group?
Filing status?
Filing status.
Yeah.
Married filing jointly, married filing single, or married filing separately.
Married filing screwed.
Married filing screwed, there you go. Single, divorced, widowed, orphaned, whatever it may be, So there are lots of possibilities. And you need to then compare their situation to the filing requirements for the group. All right, so most taxpayers fall into most taxpayers, dependent taxpayers, children, self-employed individuals, and aliens. It's kind of an interesting categories. Don't you think about it? There are five categories. Most taxpayers fall into the general category of taxpayers. Dependent taxpayers which are your kids who are just starting to work. You know, they have their first couple of jobs, and they're usually working for the summer. And then children, which are dependents, more or less, and then self-employed individuals. They're a special case. They pretty much, in a sense, get screwed all the time if you're self-employed.
Mm-hmm.
And then you have aliens, and they are in a special category all themselves. Okay. Now, once we've determined which category they're going to kind of fall into, now we have to really find out what overall category. Are they going to be filing separately, filing jointly, head of household, that sort of thing? All right. So we're going to find out their filing status, their age, and what is the most important thing. On December 31st, gross income. Their gross income is determined on December 31st of the tax year. That is the most important day, because that's what determines whatever they've made as of that date. Okay. Now, gross income, as you know, is all income received. What's income?
Money, goods, property, and services.
Ah, that's
Not
such
exempt.
as. Right. Not exempt from tax. But there's a key thing in here. This is important. When it says such as money, goods, property, and services, let's look at what these actually are. Money is what?
Cash.
Cash. Money is what?
I'm not sure where we're going with this.
This is a very important one.
Money can be all sorts of things, I think.
Yes, it can. Thank you.
Bartering and stuff.
But there's a really important fact to this. What is legal U.S. currency is what money actually is. It's also legal foreign currency. Anything that is considered legal trade as tender. Now, that's really important. Now, what's its value?
Well, it depends on the
Whatever the bill says.
market.
Thank you. No, it does not matter at all what it says in the market. It says specifically what the bill says. Thank you, Beth. It is printed on it. That is what its current value is. What is printed on the face value of the currency. Now, what its value to purchase is may change. The value of a dollar may change, but a U.S. dollar is still a U.S. dollar. Okay. A U.S. penny is still a U.S. penny. Okay. A ruble is still a ruble. Okay. It may take 1,000 rubles to buy one thing, but it's still a U.S. ruble. Do you know why that is so important? Any idea?
Well, otherwise it'd be an accounting nightmare.
Oh, no. Much worse than that. Let me go to the whiteboard here. Let me share a situation that businesses do and ended up in court over and prove that U.S. currency is U.S. face value currency. That's why when Beth said it is the value that is printed on the bill that is U.S. money. Okay. This is very important here. Business A has a profit small business of $10 million. Okay? Now, as a small business, it only has about 20 employees. But it did very well. Now, if I have about 20 employees and I want to pay them $10 million, how much are they going to get taxed on? If I take it up and divide that by 20, about $500,000, right?
Okay.
Pretty much, right?
Mm-hmm.
Do I want to pay the taxes on $500,000? What happens if this company, remember, this is a company, this is a corporation. So if it goes and purchases something, what is that considered to the company?
Asset.
Nope. That's an expenditure. So at the end of the tax year, what is it taxed on? This company, what is it taxed on at the end of a year?
Less.
Thank you. It's taxed on whatever is left.
Mm-hmm.
So what does it do? It goes out and buys
A whole bunch of stuff.
Oh, no. Specifically.
Widget maker.
Nope.
A money-making machine.
Oh, yes, it does. It make it. $10 million in $20 gold U.S. coins.
You mean they don't pay anybody anything?
Oh, yes, they pay them specifically. Just wait. How much is a gold coin? It's about 1 troy ounce. Does anybody know what the current value of 1 troy ounce of gold is?
I don't keep track of gold.
It's about $1,500.
What is a troy ounce?
1 troy ounce.
What's a
of
troy?
gold.
What's this troy mean?
A troy means a specific measure of an ounce within one thousandth of an ounce. It's a specific measure. It means its accuracy is to 1/1000th of an ounce.
Oh, okay, but it's still an ounce.
It's still an
for
ounce.
All practical purposes.
Mm-hmm. So
And
it
the
costs about $1,500 for that coin. So take 10 million and divide it by. You guys got your calculators handy? This is going to take some math.
No, I don't have it.
Take 10 million and divide it by $1,500.
Divide it by 1,500.
Uh-huh.
I don't even have scratch paper.
Gotta go.
Mm.
I don't know if I did that right.
That's okay, I'll do it.
$6,666.
Well, it's coins. You're determining how many coins were bought. Take 10 million.
So we have
divided by 1,500, because they're about $1,500 a coin, means you end up with about, per coin, so that equals about 6,667 coins.
Yeah.
Okay? Total. There's 20 people. So we take that number and we divide it by 20. And that means each person gets what? About 333 coins. Okay?
Mm-hmm.
Now, how much does the company pay in taxes now? They spent all $10 million, right? So what's their profit left?
Zero.
Zero. So the company now pays no taxes because their profit on their balance sheet is zero. Now, take 333 coins.
Times 1,500, you should get $500,000.
No, it is not.
Times $20.
Times $20, because the face value on that coin, U.S. currency, is $20. Because that is legal U.S. tender, and by the way, it went to court, is $6,667. So their total profit that they get taxed on for the year, because that was their pay bonus for the year, they got paid in gold U.S. currency that has a stamped U.S. value of $20, because Beth was absolutely right. It has a value to the U.S. government and the IRS of $20.
This is terrible.
So, no, it's not terrible. It's perfectly legal.
Well, I know, but it's like
no, it's not terrible. It's the smartest thing you could ever do. I love this idea. I'd do this every day if I could, but they actually tried to change it. So, anyway. So, Beth, how much do you get taxed on? Because what is your income now? You got paid $333 $20 gold U.S. coins, which have a value to the IRS of $6,667.
But you called this like a bonus, so they still had a pay.
No, this is their yearly bonus. This is their profit for the year, because they own the company. They didn't have to take a draw or anything. They're the owners of the company.
But do they still? They don't have income.
No, they don't necessarily have any income. This is their individual. They own the company. It's the 20 people who own the small business.
Okay.
So, what are they taxed on?
$6,667.
Thank you. What is this? 333 times $1,500. Because the gold has a separate value all of its own. Right? So as gold,
I see how your mind's working.
It is worth $499,500.
This is how criminal minds work.
Oh yeah, that's
I'm
awesome.
liking this.
I love this because I actually think this way. So this is scary.
I don't at all.
I think this way all the time, so I must be a criminal.
Good stuff.
But how much do they get taxed on? What is their income?
They get taxed on the $6,000.
Thank you. They get taxed on $6,667 because what were they paid? What were they actually paid? Because Beth said it.
$20.
$20 gold, official gold U.S. currency coins. What is the value to the United States? Because it is officially by the U.S. Mint stamped on that coin.
So is this going to be on our test? This kind of stuff?
Yes, it will, because it is what is considered official U.S. money. That's one of the things that you have to understand, the understanding of what it means when money, because you also have to understand fair market value, because that's also the value of property.
So then, okay, so if these people get paid this amount, and so, you know, you don't go down to Starbucks and whip out your $20 coin to buy a coffee, because then you'd only get $15 back. You wouldn't get $15 in gold.
Would you? Why would you take the coin down to Starbucks? What is the value?
Well, what I'm saying is to use.
Hang on a second, Linda. What is the value of that coin to a pawn shop?
I don't know.
Right, you'd go spend it at Starbucks.
Why would you ever go spend it at Starbucks? What is that value to a pawn shop?
Well, what I'm saying is to
Linda,
use,
what is that value to a pawn shop?
I don't know, the $4.99, whatever.
It is worth
$1,500.
$1,500 to the pawn shop.
Oh, okay.
Market's at.
So what is the value at $1,500? What is important about that value? The
Fair
most
market
important.
value.
Nope. What is really important about that value?
It's
Below what?
I don't know.
It's below the reportable daily limit.
Reportable daily limit of what?
$10,000. The pawn shop does not have to report any transaction that is below $10,000. You have to understand what a currency transaction report is. We're going to get into that a little bit later. Okay, you have to understand that businesses are required to report any transaction where they actually pay a customer more than $10,000. Okay, is this below the $10,000 limit?
Yeah.
So is it illegal to go sell that coin for more than the $20?
Yes.
No, it's not illegal to sell it for that. It's not illegal. It's gold.
No, it is legal.
It's perfectly legal. It's not illegal. That's what I'm saying. Yeah, it's perfectly legal to go sell it for more.
And you don't have to report that you sold gold?
Nope. Why would you have to report it? It's a personal item. Do you have to report personal property?
Yeah,
You're supposed to, but are you going to report this?
I'm going to.
Well, wait a second.
Uh-huh.
Now, what are we talking about here? You said you don't have to report personal
You don't have to
property, but-
report personal property if it's below the certain limits. I mean, think about this.
You mean
let's
if
put it this
if
way.
I go and sell my grandmother's teapot at Beekman Antique Mall right here in Corvallis, and they sell it for like $100 because it's less than $10,000, I don't have to pay tax on that?
I don't
No.
think that's accurate. I just did a module on this. If you have a profit, it has to be on the tax return. If you have a
Well, I mean, I don't know that I had a profit because I inherited it. Say,
I just did this module for like the third time.
What was it called?
Let me look. Probably the other income one.
Oh,
Other income.
okay.
Mhm. But when you do this, think about it. Gold itself has a value entirely different than the face value of that coin. Are they going to end up reporting it?
Heck no.
Heck no.
right? But you sure this makes a whole lot of sense in one way, but it's not the most. You know, we're talking about tax law and talking about being totally ethical here as tax preparers, and to me, there's a
We're
little
also
shade.
learning. You're also learning about reality too.
Right, but the test
Linda, you
is
have to understand about reality too, and you have to understand that the important part of this is not necessarily the secondary part that you're worried about. The important part is the fact that things are stamped as U.S. currency, and even though it has a secondary, even though it looks to be worth $1,500, Beth is the one who answered the question correctly. Even though it's a gold coin, it's its stamped value that's what's important. Okay, it's the United
but
States.
for that individual taxpayer, though, I mean, he sold personal property and got $1,500 for something that was worth $20, so he got $1,490.
That's one of those should you.
So
Should you
And
not?
that's where should you not? Correct.
so
And that's that personal information question too that you need to start understanding too. So you have to collect this information, Linda. Did you ask him where he got that? Where he got his money? because he's not going to tell you. He's going to show you a W-2, isn't he?
Mm-hmm.
He's not going to tell you that I just bought that car for $10,000 that I got from the pawn shop, is he?
He's not going to necessarily show you a W-2, because if this is from a small business, isn't it going to be on a K-1 or something? It's not like they issue W-2.
Correct. He's going to give you a K-1 for $6,667. Correct?
Yeah.
Yep.
Uh-huh. Because that's all you get. You don't have a K-1 for the $499,000 that it's actually worth later on, and you don't have any idea how long he holds on to it for.
And he's not going to tell you that he's got it.
He's not going to tell you that he's got it either.
I'm not going to dig and ask.
Uh-huh. So, the important part, Linda, is you're missing the most important part. Things that have intrinsic value may very well be different than the stamped value on them.
Right.
And things that are stamped with a U.S. currency value or a foreign currency value, that's why I ask you, what is money? Money is the stamped value on an object. So it's a gold coin. It's a US $20 gold coin. That makes it worth $20 US, not the $1,500 of the gold that it contains. It's worth $20. And that makes it a whole lot different. And that's why you have to understand things have money value. Now, the other thing in this is you have to see where it says goods, property, and services. All right. A lot of people barter stuff. Okay. That's a major thing, especially when you're talking larger items. Houses, people barter them all the time. Okay. High-end houses, they don't get sold. They get bartered. They get traded. High-end cars, they get traded. They don't get sold.
So with those houses, would it be a like-kind exchange?
Nope. Like-kind exchanges are for commercial property. Do you understand what a 1031 exchange is?
Well, I've read it, but I'm not sure if I remember everything right now.
A 1031, well, we'll get into that later. But a 1031 exchange is for commercial property to a commercial property. It has to be an income property.
Okay. Right. Yeah, because I was thinking about my friend who she rents places, and she has a number of rentals. And when I was talking to her once, I said, well, if you sell that, you're going to have big capital gains, so you might do a like-kind exchange, whatever.
And there are certain restrictions on it too, that you have to announce that it's a 1031 exchange beforehand, and you have 60 days to identify the property that you're going to purchase, and then you have 180 days to actually purchase the property. Or you have to have a 60 days to identify like properties that you're considering for it, and then you have 180 days to actually purchase the replacement property. So yeah, there are certain restrictions, but you have to announce it. The problem is most of them don't realize that it has to be announced as a 1031 exchange before you sell the property.
Okay, yeah, sort of timing sounds like it could always be kind of tricky.
Yeah, so 1031 exchanges are really easy if you know what you're doing. If you don't, you end up usually blowing it and end up with paying the capital gain.
Yeah, I know it. Today's Wednesday. Tomorrow I have at the Tax Society meetings, we had a presentation by somebody, and they're companies that you can go to, and they will escort you through it. But so tomorrow, you said it was going to be a shorter day or something, because I want to go to the tax consultant meeting, which is I have to be over in Albany by around 6.
Yeah, I'm going to that too.
All right, that's actually good then, because then what we'll probably do is
tax consultant meeting. I thought it was on the 18th.
No, this is for the OC.
Oh,
OACT,
not for
Oregon,
tax.
the Oregon Society of Tax Consultants,
Okay, something else.
OSAC.
Okay.
It's their monthly meeting.
Okay. No, we'll see if we can. If you want, we'll actually then if you have enough of you going, we may actually then skip tomorrow and just make it up on Saturday, if you guys want to. If enough of you want to go, because I know if
It's going
Pam.
to be on divorce.
Okay, and that's actually important then. But the other thing to consider is the value of services and the value of property. Okay, I got to take this call for 1 second, so let's take a 10-minute break quick. Okay. All right, give me 1 second. Let's take a 10-minute break.
Bam.
Going to get me a drink.
That's a really cool walking stick.
I like it. I get lots of questions about it. And
Looks like some of the ones that's for sale at the art fair.
keeps me
Okay,
from falling
I
in.
like that one too, actually.
Oh.
I'm preparing a tax return.
You are?
Mm-hmm. The drop off.
Oh. You are a multitasker then.
Well,
So that's why you have two windows up there.
funny you should ask.
Huh?
That computer I can get to Google on
Oh.
tax returns on it because it's not safe. So I'm working in 2 different places doing
Okay.
the thing over there. And,
That'll work.
yeah. But it's only next door, so it's not, you know. It's about 12 steps away. Is there a way to make this screen on top all the time instead of making it a little window? That's not what I want.
Do you have your phone with you?
Yeah. I better remember to not think out loud while I've got my microphone on. What I'm doing isn't doing it.
Oh.
I still have to get my last CE credits.
I gotta get some done. I have about 4 of them left.
I've got 3 to go, but my problem was since the switch over from corporate, they were telling me which classes I had already taken. So when I went back into it as my new self,
Oh.
Oh, it didn't recognize you.
7 of my classes I already took. So
Yeah.
I had to go back and take, and now when I hop into it, it says, you've taken like 105 hours or something crazy. And I'm like, what? So I think it finally recognized me, but it still won't tell me. I don't know.
Somebody needs to fix it.
Is that a hint?
Uh-huh.
Thank you, dear.
I can't access to my previous.
Or make James fix it. Or somebody.
No, I would end up.
I've already called on it. They can't give me access to my previous classes.
No,
I'm so glad I
previous
printed
class
them
just has
out.
to be transferred over.
What do you mean? Because mine showed up from all the years
They said they couldn't.
I
No.
think I'd have to look.
That's what
No, the profiles will be. We actually have to move them over from the one profile to the other profile.
Okay.
So unfortunately, the learning group has to do it, and
that's who I had contacted was the learning
yeah.
group.
Hopefully, they have to physically move some of the numbers over, so it'll be there. Hopefully,
They said that
getting them to do is.
The only way it'll show up on my transcript is through the Circle of Excellence, and that's it.
That's it.
Like I can't print out my previous certificates or whatever. Thank goodness Oregon doesn't go back. You know, I printed out all of last year's, the ones I did in like September and stuff from last year. So I got smart.
All right. Linda's not back yet. It's all right.
Nope.
Oh, was I confusing though? Because I was trying to emphasize that it's the face value of currency.
It might have been confusing to Linda.
Okay.
But I see how the $20 gold coin is only really worth $20, but
it's only worth $20.
But we all know that we could actually get
$1,500 for it.
Yeah, because it's
gold, and they could hold on to it for a while. They could hold on to it for a couple of years and go sell it off.
Yeah.
Go sell it off in another country. They don't care that it's stamped U.S. currency. They'll go melt it down. It's $1,500 in gold. So.
I have a whole bunch of silver coins that my mom and dad gave us as presents.
That's good.
So
I've got a few silver coins. I actually keep a couple of silver coins. Old, just they're just quarters and stuff like that.
These are the ounce. So,
yeah.
And I don't know what silver is anymore, but
I don't know. I think they're like, you can sell them for like $35 or something like that. I don't know.
I think I'll hang on to them.
There you go.
Her intention was that if paper money went away, then we would have something to have to use to buy.
But those silver coins are a good example. Think about it.
Yeah.
They're not a U.S. dollar. They're a piece of silver. So
I think all it says on there is 1 ounce, maybe.
Some of those, no. I think they do. They're stamped $1 U.S.
Oh, are they? Because I haven't looked at them for a while.
Yeah.
I should do that.
But the $20, the $5, and the $20 U.S. gold coins. Yep, that's that actually went to court because they wanted to tax them based on the fact it was $500,000 each.
Yeah.
Nope. The judge said no. You paid them in U.S. currency. Luckily, more companies don't know about that. But
are we back? Are we back?
Yep.
Oh,
we're back.
Oh, okay.
Yeah, we were just waiting on. Nope. We were just talking. We were just waiting on you.
Oh, okay. Because you said 10 minutes. So.
Yeah. No. We were just talking. Yeah,
Let me just stick something back in the fridge. Hang on.
No problem. I was still eating cheese. I couldn't find any string cheese. Okay. So I hope that made it clear somewhat that money is not necessarily what it's made out of. It's its stamped face value. And I know even though that seems really strange, it's the same with silver coins. It's the same with gold coins. Mm-hmm. Even though they have a value for their coin value, it's their face value that matters. And their face value is what matters to the IRS, because the IRS would like to tax you based upon what its gold value is, but they can't.
So if somebody sells a coin collection, is it just the face value of all those coins?
Nope. They're actually selling it. Remember, they're selling it for more. They're selling the gold. They're selling the precious metals.
Okay.
It becomes, because they're selling it as a different item, it has a different value. Now, that's the important thing. And Linda, you brought up the best part. Thank you. Things also have what's called a fair market value. Now, that the only reason that worked with the gold coins is because they were legal U.S. tender. Okay? It wouldn't have worked if you'd done this with a piece of art or something like that.
Right. It's a very specific example.
Mm-hmm. It was a very specific case, and that's really exactly why they did it.
They took it to court.
Okay. Yep, they took it to court. The IRS wanted to get their taxes, and the judge said, no, they were paid in U.S. currency. And sorry, I'm sure the IRS watched them for a very long time looking for them to go sell off then, just like you said, the gold and try to get additional money out of it. But if they held onto it for a while and did it under a, well, smaller amounts, even held onto it for a number of years, they can only watch it for so long.
So if you sold one of those coins every day for 10 days, it still
doesn't make a difference. It's a 24-hour period.
So what? Oh,
the large currency transaction report, the 8300 report, only works for a 24-hour period.
Well,
that's the way the law is written.
Somebody got the law written for their advantage, I guess.
Well, no, Patriot law was written. The 8300 form was written to prevent people from doing terrorist acts, and it's really specific. And if they went to multiple places, there's actually a log for that, but that's actually in the business section of the EA stuff. So that's kind of beyond what we're doing for this class. So,
oh, okay.
So
okay.
yeah, so I won't get.
We don't have to know about that.
You don't know.
We don't have to know about that law.
Yeah, you don't need to know about the 8300 and the currency transaction reports. That's something that goes way beyond what we do here. And I have to deal with that all the time because my wife has to do all the ones for the casino. She oversees all of those and has to represent them to the state. So when they have them, she has to double check all those audits on a daily basis. And they don't have one or two of them. They have thousands every day. So, and they have to log it anytime it's over $2,000. They have to log it so that a person doesn't come in multiple times within the 24-hour period. And that's one of the things that happens. There's a difference between a currency transaction report and a currency transaction log, but that's, like I said, that's way beyond what we need to know for this part. So don't worry about it.
All right.
But what you do have to know is in that second category there where it says money. Money means what its stamped tender value is. And that could be U.S. currency, foreign currency. Okay. Goods, property, and services. We're going to skip the goods for a second, go to property. Property means usually real estate by property. Okay. That means large asset property, houses, rental properties, things like that. Services are things you do. Okay. Things you receive. All right. Things you do, you would receive payment for. Services you receive is considered a payment. Okay. So people can do jobs for you as payment. And the value of what they do is considered income to you. Okay. But the hardest one is the one that says goods. And it's the main reason is because most people don't realize that everything has what's called a fair market value. And by fair market value, it means that a car has a value, a TV has a value, stereo has a value, your everything has a value. And it's based specifically on, as I said, it's called the fair market value. And the fair market value specifically to the IRS, and this is the IRS's definition, means the value of an object if it was sold to the general public without duress and without restraint. Okay, that's really important because with that definition, it means specifically you aren't trying to do a fire sale. In other words, you're not discounting it because you're under the duress of you have to sell it this week. Okay. And you're not out there under the duress of I am in such debt that I've got to sell it. I can't afford it or anything like that. Okay. It means what would its value be if I went out there and presented it to the general public and everybody had a chance to buy it, and what would it be? Yeah, honey. Okay. Okay. So that is what the question would be. What is its fair market value? And that's the important thing. It means not under duress. Okay.
And is that definition also, they don't say, oh, don't they say between a willing seller and a willing buyer?
That's what it means by not under duress.
Mm.
Okay, so yeah, so willing seller and a willing buyer, but that's what it means as to not under duress.
Okay.
So yes, it has to be a willing seller and a willing buyer. So in other words, the seller is not being pressured in any way, and the buyer is not being pressured in any way. Okay. So with that, you are buying and selling a house. Sometimes you have to get out of it. So what do you do with that price?
Drop it.
Drop it. Okay. So that's not the fair market value of a house. Okay. If you are selling it, normal conditions, normal things, that would establish the value of that house. If you have a car, then same thing. You're selling a car, same type, same everything. Okay. That establishes the fair market value.
So by extension, then you're saying if somebody has a $200,000 house and they have to move right away and they sell it for $100,000, the IRS wants to tax them on $200,000.
They will tax them on $200,000, correct? Because that is the fair market value. Okay, it's not the $100,000; it is the $200,000.
But how? I mean, how does the IRS go? They go around and look at every sale and figure out whether or not they got the. I mean, everybody when they buy and sell houses, that you know.
Have you ever done a comparative market analysis on houses?
Yeah.
Because I've done real estate since the late 90s, and I've had a broker's license, an actual principal broker's license for a number of years. Comparative market analysis means that you look at least 3 houses that are within 5 years of the build age, same size lot within 0.25 acres, the same size square footage, same number of bedrooms, same number of bathrooms. If you can, the same builder and within 1 mile of that house. Okay. Those are the restrictions on an actual house. It's not the neighbor's house. Usually, unfortunately, the person who wants to sell a house, they think it means the neighbor's house. It has nothing to do with the neighbor. Let me get this off here.
Well, I mean, is that a digression for this? I mean,
yes, that's really important for this, because what it means is the exact same thing is true for all items that you have that you barter with. And barter is considered a major form of exchange in regards to gross income.
Oh, okay. But if you went and if you weren't bartering and you went and sold this house for money, and then whatever your sales price would be considered what would be the actual price, right?
Correct.
Okay. It's just when you add in
it's only
barter.
if there's an exchange made, typically of items. Okay. So that is now that there is an exception to that. If there is a house that is foreclosed on, okay, you do have income from it. You do realize that. If your house gets foreclosed on, it's called a cancellation of debt.
Right.
So realize that, because that goes off of the fair market value of the house. Okay, they're canceling that debt and what they can sell it for, and you are responsible for the remainder of the debt. Okay, so it is a debt that is considered income that you have to account for on your taxes because they're giving you that amount of income. The bank is giving you that income, and you have to account for it on your taxes. So remember, forgiveness of debt is not considered debt-free, is not considered tax-free. So remember, all those are sources of income. All right. So we're getting a little outside of that, outside of where we need to be. The analysis is mainly you have to be able to do a fair market value analysis of items when you are doing people's taxes. And that means to understand what the fair market value is, because especially a lot of people are now doing bartering, especially with things like OfferUp, and because a lot of people use it.
What's that? Is that online or something?
OfferUp's an online service, which is basically, imagine a great big electronic garage sale. And businesses are now actually using OfferUp to exchange items and sell items. And they don't always, they will actually say offered for trade, not just for sale. So you have to be able to assume what the fair market value is. Okay. And that's really important.
So who has to get the report, the appraisal?
Well, the analysis of most of the objects, when they're reporting it, here's where your responsibility comes in. Remember, you're responsible up to what they inform you of.
Right, right.
If they tell you that I have been trading, here's what I've been doing, what happens to the person who walks in? I've had people walk in and say, by the way, I've been trading Bitcoin. Okay. How many people know what cryptocurrencies are?
You are responsible for.
You're responsible suddenly for analyzing what those cryptocurrencies were that they've been trading in, because they may have made a lot of money on cryptocurrencies.
I would leave that up to them. You bring me your basis.
There you go. You bring me your analysis. There you go.
Right.
Unfortunately, now there are laws which specify how you're to handle the cryptocurrencies.
Like not at all.
So
Randy,
yes.
Randy, I'm on an online tax course for the tax consultant thing right now.
So
yeah.
Let's give Linda a second here.
Well, it's really loud. Oh, okay. Or you can call back later. I can turn down the volume. You can call again. Okay. Well, I just turned the volume down to 0 if you want to call back. If that's easier.
Yeah.
Hello?
There you go. No problem.
I
We were just
got
waiting
this
for you.
huge, I mean, it was really loud message.
Yeah, I heard that. That was that was loud. So now here's the important part. Remember, it includes earned income and unearned income. Do you guys know what the difference between earned income and unearned income is?
Judd, that was on the basic test.
Yep.
Okay. I just have one question.
Mm-hmm.
You said you are responsible for up to what they tell you.
Correct.
And was there anything else important to note there?
No, not really. I mean,
Okay.
if they
Basically,
haven't informed you that they have additional income, then you have no responsibility past that.
Oh, if somebody doesn't tell you I sold all my furniture at the garage sale last week.
Right. You wouldn't have any way of knowing that.
Okay.
So you don't actually have the responsibility.
Right. Other than there is a question on there where you ask all their income,
Correct. Have you informed me? Is that all you've, is that everything kind of thing?
Right.
Right.
So, what can you do if they don't tell you?
But remember, your gross income includes all earned and unearned income. So all your unearned income is things like your, what could include your unearned income?
Interest.
Interest, dividends.
Dividends.
There you go.
Mhm.
Anything coming in from the side. Okay. So any income of that nature. Gifts. Those are always interesting. Gift income. Things like that. Okay. All right.
But
So
there's limits. I mean, you can give a certain amount as a gift.
you can give certain limits,
Okay.
yes.
But if you
remember,
receive
when
a
you're
gift,
receiving it,
oh, it's income. Okay.
it's income. You can give certain limits, yeah.
Okay.
But remember, when you're receiving it, it's still income. So, okay. Filing requirements for most taxpayers. And unfortunately, this is the table I hate because you more or less really do need to know this table. This is 2018. So, filing requirements for most taxpayers. Single. And then there's the over and under 65. Okay. So remember basically the 12,000, the 65 and older, 13,600. Married filing jointly, 24,000. Then you have the one spouse and two spouse for the 65 and older, 25,300, 26,600. Okay. Married filing separately is pretty easy. $5.
Is the test going to be on the 2018 or 2017?
This is for basically for the tax season 2018. I think what's going to happen is it's going to have changed, so we're going to have to update these numbers, and I'm going to get you an updated list.
30th, so
yeah, so it will probably have changed. It depends on when you guys exactly take the test.
Well, wait a minute. We're not going to have to know 2019 if we take it late before. I thought that like Pam were still taking 2017, and that was through.
We're going to find that
September or something like that.
So don't worry about it so much. We'll get you updated on it.
Okay, and so where is this schedule from? Is this from the?
This is actually, we're going to get the updated one and find out specifically which they're going to. We're going to get you the updated to find out exactly which one they're going to be testing on.
Yeah, 2018, September 30th.
So, because this is September 30th is normally when it changes. So, so we're right at the border more or less. So it depends on when they're going to.
I have my 1040 instructions for 2018.
So
it does. Yeah, it looks pretty much like that.
So it would be this because this is the 2018.
Yeah, it's called Chart A for most people on page 10 of the instructions. Okay.
So this is the numbers for 2018. We don't know, and it's not supposed to change until September 30th. So if they end up testing before it, it's supposed to be this. If it tests after it, it's supposed to be the new set. So
really?
We'll find out, yes.
I thought we were dealing between people were taking.
Like I said, Linda,
like
don't worry.
Pam
and
Pam were still dealing with the 2017, and then after this 30th or whenever it was, then it would be the 2018.
Yeah, don't worry about it. Yeah, we'll get it straight exactly what they're going to be testing on. So
because
very soon
before I start changing all the numbers, I printed out the individuals thing from the EA review. So I was going to write in all the new numbers. So I won't do that yet.
And anyway, honestly, they're all pretty close, and so they only increase each couple of years, or know. So
but some of the laws are going to be way different.
Yeah, the laws will be way different in some cases. So, but the tables are staying pretty much the same. Will have changed a little bit. I think it's 12,400 now for the one, but we'll figure out. So, all right, now. So if we're looking to see if somebody's required to file using this table, okay, let's look at they're married and they live together all year. So their filing status is married filing jointly. So their ages and incomes are there. So they're 27 and 29. Okay, so they're both under 65. They're married filing jointly. So we can check the married filing jointly portion here. So let me go back here. Wrong. There we go. I went the wrong way. There we go. So we know we're married filing jointly. Okay. They're both under 65. And let's start totaling this up. Well, that's 23,900. Nope, it kicked over. So it's 24,000 some. So guess what? They're just over $24,000.
Have to file.
So guess what? They are required to file. So they're just over $24,000, both under 65. So they are right there. Even though they're really close, they are required to file. So let's take a look here. So William is 19. He's single. Filing status, single. Gross income, $10,000. Is he going to have to file? Shall we go back and check?
I have the chart right in front of me.
You got it right there? So nope. No, he is not going to. All right. So 57, 57. Live together all year. Filing married, filing separately. Now we're looking between them. So we have how much here? There's $25,000, $26,000 there. So is Tommy required to file? Tommy's gross income is $3,600. Married filing separately.
Yeah.
Yes.
Over
yes,
$5.
He is. Thank you. It's over $5. She got it right away because in every case, married filing separately sucks. It's like $5.
Yep.
All right.
Yeah, that was new.
Sonia is single, qualifying widower with a dependent child. Gross income is $25,000.
Yes.
Yes.
Yes. Okay. Greg is 68 and divorced. Head of household, $19,100.
65.
I'm seeing a no.
Yes.
I'm seeing a no. I'm seeing a yes.
Oh, wait a minute. His income is $19,150. Okay.
Yeah, I'm seeing a no.
No.
I'm seeing a yes. No, I went to a no. I got a no, no, no. Looks like a no. It's a no.
He probably might want to, though.
He probably might want to, though, because he's probably going to get some income back.
That's right.
So,
Yeah.
so Bobby is 102, and believe it or not, Rochelle is 100. Lived together all year. Married filing jointly. He made at 102. Okay, Bobby made $17,000 at 102.
Investment.
God, I hope so. I hope it's investment. I hope it's investment income. Rochelle's gross income was $9,000. Are they required to file? I would just file anyways because I'm just impressed. So you're looking at $16,925.
$925.
26,900. Yeah.
Yep, $26,925.
So yeah, they're the $25.
102 and 100. So they're both over 65.
Add that extra in there.
65 or older, both spouses.
Married filing jointly.
600. So they're 26. What was it?
26,925.
Yes. No. Yes, they're required.
They hit the 900 point, so it looks like they. Nope. Wait.
It's 26,600.
Yes, they are. Yes, they are. It's 26,600. It's 26,900 they made. All right. The gross income amount for filing requirements for most taxpayers does not include what?
One of the
Wages?
negatives.
Not. It's a not. I hate knots.
Requirements for most.
Well, we know it includes wages, so we can knock that one off. Unemployment compensation.
Yeah.
That's normally taxed, so we throw that one away. So we know it's either got to be tax exempt interest or savings account interest. Well, tax exempt interest sounds pretty much like it's a not, And we got savings account interest. Sounds like it's interest, so it sounds like it's an income. So I'm guessing tax exempt interest, just based on our testing rules, right?
Right.
So we're guessing tax exempt interest, and actually it is tax exempt interest. Okay, that's again, like I said, just using the test taking rules. Eliminate the ones that you know it can't be. You pay taxes on wages, and you pay it on unemployment compensation. So, all right, filing requirements for dependents. Well, pretty much you pay taxes or you get some money back for some dependents. So, a dependent taxpayer is a taxpayer that can be claimed as a dependent on another taxpayer's return. It's your 16-year-old who's got their summer job, and they're going to be a pain in the butt, aren't they? So, the filing status for dependent taxpayers is based on the following factors of December 31st. Their marital status, their age, their blindness. That's always a fun factor there when they throw that one in there. Unearned income, earned income, and gross income, which, if you think about it, gross income is more or less the unearned income and earned income combined, but okay. All right, so let's take a look. A child can be required to file a tax return if certain thresholds for earned or unearned income are met. Okay? Do we have an idea what those income levels are?
Okay.
You got some of them?
1,050? Wait a second.
It's
Oh, here we go. Married dependents.
There you go.
Your unearned income was over 1,050.
1050. All right, let's take a look. In such instances, a child is responsible for filing a return and paying the tax. A parent or guardian or other legally responsible individual must file a return for the child if for any reason the child cannot file the return, such as they're too young.
Oh.
So let's see about determining if they have to file. There's a table in there, okay? It's under the Pub 17, and it's table 1-2. And it determines the filing requirements of the dependent children. So here's one of their case studies. Natasha can be claimed as a dependent by her parents. Is she required to file? She is single. She is not blind. She has $214 in dividends from a stock. Congratulations. I don't know of too many 16-year-olds who have dividends from a stock, but that's cool. 16 years old, $518 in wages. So her gross income are the 518 and the 412. Okay, so let's run through it. Do you think she has to that she has to file?
Okay.
She has how much? 930 gross income.
Plus 400. Oh, 5,000. No. 400
I can't
gross
see the
income.
worksheet.
Okay. 9. Okay. So your earned income was for, you must file for any of the following if you're a single dependent. Your earned income was over 13. No.
So it's
Your
1050.
unearned income was over 2,650.
Right. So it's not that. So based on her gross income, her earned income, and her unearned income, she is not required to file. But would she want to? Well, she has $518 in wages. She might.
If she wants to get back what they took out.
If she wants to get back what they took out. But no, she is not required to file. Okay. There's a couple of checks here. I can't even pronounce that name.
Vashti.
Vashti?
Uh-huh.
Vashti is 67, single and blind. Can't be being claimed as a dependent by her son. Her only income is unearned income of $3,751. All right. That's does that sound like it's over the limit? Now remember, she is blind and over 65.
I'd say no.
Okay.
just off the top of my head.
Yeah, so if she's over 65 or blind, she's both. Okay, your unearned income was over 4,250 if 65 or older and blind.
So
you must file.
Nope. Doesn't sound like she's required to file. Nope, she is not required to file. Sparkle can be claimed by a dependent as a dependent by her parents. She acted in some commercials before she turned 1 year old. Cool. She earned $6,000 this tax year. Some of this money was invested, and she was paid dividends of $1,057 this tax year, which is unearned income. Is Sparkle required to file?
Okay, so she earned the money.
She's only 2.
And she invested
Her
some of
parents
that
invested
earned money.
Right?
So even though some was invested, she still has to pay. She's still considered having earned 6,000.
Okay, let's go back to taking a test, guys. Let's take a test here. She's how old?
2.
2. What are the facts? She earned 6,000 and she earned 1,057. Earned income, unearned income. So what are the requirements for earned income for a 2-year-old?
12,000.
Okay, so she doesn't have to file there for unearned income.
1,050.
And what is that number?
1,057.
Guess what?
She has to file.
Thank you. Remember, like I said, don't read the whole question, but don't get confused by all the extra stuff that's in here. Look at the question. We're taking a test here. This is a test question if you want to think about it that way. What are the facts? The facts are you have a dependent who's 2 years old, so she's under 65. She has 6,000 in earned income, 1,057. She missed it by $7. Okay. Well, she missed it by $8 technically in dividends. So yes, she has to file. All right. Let's look at this one. Ada, 66, not blind, can be claimed as a dependent by her granddaughter. Ada is married to Sal, 62, not blind. They are filing separate returns. Ada's only income is unearned income of $12. Sal's only income is earned income of $47,000, and he itemizes deductions. Is Ada required to file?
Yes.
Okay, and what do you get? Where do you get the issue required to file? Here's the why is what I'm asking.
Because she's
over $5.
Filing separate.
There you go, filing separate. The $5 limit. There you go. Yes, that is a stupid number. Do not file separately. It's like rule number 1: married filing separately, $5. Okay, think about it. Just remember that number. Have it ingrained in your head. Married filing separately, $5.
So
okay.
like that, a whole sentence about Sal, you can just ignore.
You just ignore $5.
They're just asking if Ada's required.
There you go. So like I said, you got it. You were thinking, what are the requirements here? Ada is 66 and not blind. So 66, not blind. Okay. And then you're reading it, they're just filing separate returns. So she's married, filing separately. Then look at it. Unearned income of $12. Guess what? She's over it. $5. Immediately, right there. So yes, she is required to file. All right. Children. Everybody loves children. I love children. They're good fried. Oh no. So everybody loves children. If a child's only income is interest and dividends and certain other requirements are met, parents can choose to include their children's income on their return. Now, you would not believe how many people do not know that. Okay? It's a very important thing because they start trying to figure out how they're going to account for their kids have some stock or they have some interest of something that their grandparents gave them, and they try to figure out what they're doing with it. It's on their parents' return. It's not that hard. Okay, but even tax preparers get confused by it.
It says, and
So,
certain other requirements are met.
correct. But usually those requirements are very simple. They're not that hard. Okay, 90% of the cases this is going to be true. So, and in this situation, the child is not required to file a separate return to get it back.
Well, it says parents can choose.
Uh-huh.
But
Because
that doesn't say they have to choose.
No, they don't have to choose it. But there's a lot of cases where it's worth doing it. Okay, so let's figure that one out. All right. Well, it's not something that you would actually, thinking about it, it's not something that you're actually going to come across, and it's something that you're really not going to be tested on that much thinking about it. Just know that you can do it. Okay. Filing requirements for self-employed people. You just really need to know the earnings. A self-employed individual may be required to file a return. Okay. They have to file a return if the net earnings from self-employment of $400 or more, or a church employee with an income of
108 point whatever.
Why this number is this, I have absolutely no idea. I think a couple of lawmakers got together, they got drunk and decided to pull a number out of their butt. Okay? $108.28. Okay, let's be honest. That is one of the most ridiculous numbers I've ever seen. Okay, but $108.28. Okay, if you're a church employee. Maybe it has some significance somewhere that I just don't know. But know that number.
It's got to be a percentage somewhere. Because
it's got to be something of some. It's got, honestly.
They usually round. So
you'd think it would have to do with some particular number, but I have absolutely no idea where that number comes from. I mean, the net earnings of $400 or more makes sense. Okay, that's fine. Because, little odd jobs, that's fine. But why they particularly said a church employee with an income of $108.28 or more, I have no idea. Just know that number. Okay, because those are the requirements for a self-employed person. In most cases, just remember the $400. Okay, it's kind of like the same guideline. What is the guideline that you have to issue a 1099? Which would be where most of the self-employed people would be getting that report, $600. Okay, so if they're making more than $400, they got to report it. Okay, so just remember those numbers: 400 and 108.28. Again, like I said, I have no idea where that number came from. So now, this is very simple. If you are a resident alien, and you have your immigration status here, it's really simple. You're counted the same as a U.S. citizen. All the same numbers apply. Everything that we learned, it's all the same for you. Okay? Nothing changes. All right? Now, there are certain other situations when you must file a 2018 return. Okay? Now, these are the special taxes. If you have something on an additional, if you follow the alternative minimum tax plan, okay, you do have to file. If you have an additional tax on a qualified plan, this is the IRA plans or anything of that nature, you do have to file a return. Oh, okay. Someone wanted to give them a round number and grossed up.
I like this sauce too.
Wow.
What?
Are you looking on the tax book forum, Ryan?
No, Shell was just posting it about the 108.26.
Yeah, I'm on the tax book forum, and it says it right there.
I'm glad you were able to find it. That is awesome.
Oh, did it explain it? I mean, somebody found it somewhere and explains it? Or?
Yes, it actually explained where the 108.28 came from.
Oh, so what is it? It's not in this. It's not in this form. Oh, that is. It's well here on this one, number 4 that I have. It's exempt from Social Security and Medicare tax.
No, it was they were just talking about the $108.28.
Okay, where did that come from?
They actually wanted a gross number to round up that it's 6.2% is $6.71. That would be $100. So that's $100 based on the taxes. So yes, okay, I got it. So it gives them a round number for their payroll.
The 108.28.
108.28 for taxes. It rounds to exactly $100.
Okay.
Yeah, so if you only make 108.28 and you have taxes taken out, your gross is going to be $100.
Yeah, your gross is $100 bucks.
Your net is $100.
Oh.
Got it.
And they take out. They would take out how much are they taking out? 6 point.
When they take out the withholding out of it, it works out to be exactly $100.
And that's so. How does?
That's where they got the $108.
Right, I understand that, but where do they get the 6% for the withholding?
That's with the Medicaid. We're withholding the 6.2% and the 1.4% for.
Okay, so that's 7 point. Okay, all right.
So.
All right.
That makes sense now. I got it. Okay, so
basically the wages included those
couple of things taxes. Means you made $100. Got it. Okay, that was one strange number. I got it though. Okay. Yeah, but it makes sense now. Okay, so also if you have Social Security or Medicare tax on tips you didn't report to employer, you have to file a return. Write-on taxes, uncollected Social Security, anything where you pretty much did not report taxes. In other words, tips tax, you do have to, tips that you did not report as income to an employer, you do have to file a tax return. Household unemployment taxes. So if your household, anywhere in the household basically, received household employment taxes, you have to file a return. And then recapture taxes. So let's see here.
Wait a second, which number is that one? Oh, here, see.
I'm going through here. Okay. So there's like I said, this is a number of filing return requirements. You or your spouse filing jointly receive the Archer MSA Medicare Advantage distributions. Okay. These, memorizing this list is you had wages of the 108.28 or more from a church or a qualified church-controlled organization. Net self-employment earnings of at least $400. Advance payments of premium tax credits were made for you or your spouse. Advance payments of the health coverage tax credits were made for you. That one is actually an important one. If the advance payments for the health coverage for the tax credit were made to you, that is an important thing if you have things like the Oregon Health Plan or the Washington Apple Health. if those payments were made to you, you are required, if you qualified for those, you are required to pay taxes, to file a return. So if you're receiving Oregon tax, the Oregon tax health plan, where it's supplemented by the Oregon taxes, or the Washington Apple Health, where it's supplemented by the Washington tax plan, you do have to file taxes because that is what they use to determine if you're eligible for it. Okay, so you are required to file in both those cases. So if you receive that health coverage with tax credits, you are required to file. All right, and that one's really important because that has the advance payments are usually, we get them in the form of the 1095B typically from the, I think it's Apple Health, the 1095B, which indicates that you received payments from them. And so if you are receiving that Apple Health or the Oregon Health, you do have to file a tax return. Okay. And those are...
It was just the 1095C that we had to fill out. Or am I remembering wrong?
You do have to fill it. What I'm saying is if you receive those health benefits, you're required to file.
Yeah.
It's not a matter of which form necessarily you're filling out. What I'm saying is if you receive the health benefits from the Oregon Health or the Apple Health from Washington, you are required to file because that is what they use to.
Like OHP?
That's what
Oregon Health Plan, yes. You are required to because that's actually what they use to determine your eligibility for it.
Oh, that's okay. That's what you're saying.
Yeah. So they are required, they use that to determine your eligibility. And so you do have to file a tax return.
Yeah, so they're requiring it, not necessarily.
They're requiring it. Correct.
Yeah.
So
when you say that, they're using the tax return or the form to determine their eligibility.
They use the tax return for your eligibility.
Okay.
So, yep.
Okay.
So,
I gotta go through those hoops every year.
Yep. So you do have to file that. So.
Oh, right. I get you. Yeah.
So, even if a tax payer is not required to file, they should file when she expects to get a refund from. Now, again, this is one of those things where it's saying should file. Tax withheld from a paycheck. She paid estimated taxes during the year or qualifies for a refundable credit. Now, remember, guys, this is one of those things where it's saying should. Do the math.
Okay. That's not on that list. Okay. I was looking because it's in my book. Okay. Even if
do the math on this because if it's going to cost them more than the refund, it's not necessarily worth it. Because if they're going to get back $20 and it's going to cost them $150 to get that $20 back, is it really worth it? Especially if they're not required to file.
I've done that with earned income credit too. If they're getting $6 of earned income credit, I'll just ask them if they want me to take it out.
Yeah. It's like
the form is far more expensive.
It's like, no. Okay, don't do it. You're not required to file, don't file. And we get paid on our bonuses on how many tax returns. So why would we turn them away, right? It's because it's the right thing to do. Okay, do the right thing.
There's good things about filing a tax return other than just this kind of stuff.
Yeah.
Like if you're going to purchase a car.
There you go. Having that tax return. If you're going, they're going to need a tax return to purchase big items. Yeah. They want to know that you have a tax history.
Yeah. And if you have gaps, they want to. So I would always recommend filing a tax return.
Yeah.
If you're an older person, not like if you're 17 or something.
If you're 17, exactly. It's kind of like, did you miss filing a tax year? Yeah, a couple of them. Hey, okay.
Yeah.
But if you're in your 40s and you're missing it, there might be a problem. So, but those are things to consider. Okay, so question. Marshall is 27, not a dependent, is a server. His filing status is single. His gross income is $9,271, which includes unreported tips of $148. He owes Social Security and Medicare tax on the $148 because he did not report these tips to his employer. Or again, notice that big not there. Is Marshall required to file? Now, before we go anywhere, yeah, it's like, here's the thing. He has unreported tips of $148.
That's the key right there.
There's the key right there. He has unreported tips. He owes Social Security and Medicare tax on the $148. Those two things automatically, no matter what else, whatever happened, he has to file a tax return. So yes, he is required to file. Okay, Tracy is 32, not a dependent, is single and filing head of household. Her gross income is $10,105. She qualifies for the EITC and the additional child tax credit. Should she file a tax return?
Yes.
Guys, she qualifies for the EITC and the additional child tax credit. Should she file a tax return? You know, it's like, no, she should not. No,
And
yes.
if she qualifies for EITC, she probably qualifies for OHP, in which she should file tax.
Exactly. She should definitely be filing. So, Glenn is 61, not a dependent, and Frida is 63, not a dependent, and married and filing is a married filing jointly. Frida's gross income is $9,047, and Glenn's is $10,733 from self-employment. Way to go, Glenn. After subtracting expenses, Glenn's net earning is $7,103. They have no other income. Are they required to file?
Yep.
Yes.
Okay, and why?
Over $400.
Aha, thank you, Pam. Self-employment, already $400. So, Nadia does not meet the filing requirements for any of the filing groups. However, she is still required to file a return if is getting a refund.
Those additional tax on IRA.
No. Work during the year? No. Owes additional tax on an IRA? Ooh. So we know that the first two are definitely no. Who gives a crap? You know. Qualifies to claim a refundable credit? No. So you can just read through these things. Just remember, you don't need to know the answer. Read through these. Is getting a refund? No, she's not required to file if she's getting a refund. That doesn't mean anything. The IRS wants to keep the money. They're going to say, no, don't file. Work during the year. Well, we know that's not a requirement for filing. Owes an additional tax on an IRA. That sounds like a definite possibility. Qualifies to claim a refund on a refundable credit. That's getting a refund. That doesn't mean she needs to file. So just knowing that, again, using our test taking things, we just checked off the ones we didn't know, and guess what's left? Owes additional tax on an IRA. So with that, guess what? Just using the testing works, doesn't it?
Yep.
Okay. Young is not required to file a tax return. Which of the following is not, again, that not, a reason why he should file a tax return? So with this, what are we looking for? We're looking for the one that's not a reason he should file to get a refund. So everything that is a reason, we eliminate. Okay. So let's see. The full amount of his federal tax will be refunded. Well, that's a reason he should get a refund. He should file. So that's something he'd want to do. So that's not a reason why he should still file. You know, okay, that doesn't make any sense. So part of his federal income tax will be refunded. Okay, what? That doesn't make any sense.
Withheld will be. Oh, okay.
Okay. So he's not required to file a refund. So he's not going to file. Which of the following is not a reason why he should still file a refund? So why should he? What is not a reason why he should still file to get a refund? Okay, what do you think? What do you think?
That
not throws you off, doesn't it?
yes.
Okay.
Oh,
so,
a reason to file would be.
So what is it without the not? Think about this. If I
What
take
is
the
a
not
reason
out.
he should file?
Yeah. Why? Which of the following is a reason why he should still file to get a refund? Look for those. Take the not out. Which of the
Okay.
following is a reason why he should still file? The full amount of his federal income tax will be refunded. Well, that's a reason why he should still file.
I'm leaning towards the last one.
Okay. Part of his federal income will be refunded. Well, that's a reason we should file. He qualifies to claim a refundable. That's a reason he should file. He has unearned income. Uh-oh.
He may or may not have a refund.
Yeah, so wait a minute. Of everything, that's not a reason he should file, right? So that's saying, which of the following is not a reason why he should still file to get a refund? That sure sounds like a reason not to file to get a refund, doesn't it?
Yep.
So let's look at that. Yes, that is not a reason to file. So that not was put in there to throw you off.
Oh, that one is so confusing.
So remember, like I said, the not was designed to confuse you. It's designed to hide the answer.
Yeah.
Okay, so what you... My watch. So what
It's
you
not a
want to
reason
do...
why he should. It's not.
So, okay, let's
not,
read this.
I understand the first three, but I'm still. Okay, so it is not a reason why he should file. So because he has unearned income doesn't necessarily mean he has to file.
He is not required to file a tax return.
Okay.
So
when he has unearned income, unless it becomes
he
a
has
certain
unearned
amount.
income.
Unless
Right.
it's a certain
And you know
amount.
what? When I read unearned income at first, I thought it meant he was getting EITC.
EITC, yeah.
I had to get that out of my head.
Exactly. Remember, that not was put in there to throw you off.
Yeah.
So do it the other way. Take the not out. Read the question without the not. Which of the following is a reason why he should still file to get a refund? Okay? So let's look for those. Because remember, the not, take it out. That made it the opposite. So look for the reasons why he should still file to get a refund. Take the not out. Because it's just the opposite that you're looking for. So which of the following is a reason why he should still file to get a refund? Well, the full amount of his federal tax withheld will be refunded. Well, that's definitely a reason I'd want to file still, right? I'm not required to, but I'd want to get a refund. Part of his federal tax withheld will be refunded. Yeah, definitely I want to get that refunded. He qualifies to claim a refundable credit. Well, yeah, I want to get the refundable credit. Okay. He has unearned income. Well, wait a minute. No, I'm not getting anything back on that. That's going to be more income. That's going to cut my refund down or whatever I'm getting. So wait a minute. That sounds like a not, doesn't it? So that would be a not. So look at it this way. Now we put the not back in. Which of the following is not a reason? Well, that is a not. So you found the three reasons. So go back, and you know that that's the not now. I told you those testing, I've learned those testing skills for years. Okay. So, all right. Let's do this. It's already 5 o'clock. You know what? I don't want to push this anymore because we've got the last part of this is actually fairly short. So we're going to do this. Questions on what we've learned so far. Let's go that way. Questions?
Oh, you're asking if we have questions.
Yes, if you guys have questions on what we've covered so far, because I don't want to go farther necessarily because it's already 5 o'clock.
Yeah.
Right.
Okay.
And I don't want to throw more stuff at you, especially because now we're going to start getting into the filing status. The filing statuses, that's a different area. But we can cover that quick on the next section. So questions on the first part. Let's go back over it. Okay. Let's run through it really fast. Resident aliens, money, goods, fair market value. There's a lot here, and it's really kind of important to understand this because I don't want to get into head of household and qualifying dependents until the next time.
Right. But are we going to be able to finish all the material in the 4 weeks?
Yes, we are.
Okay.
Actually, we'll probably cover it faster than the 4 weeks.
Okay.
Because this is the hard part, not the other stuff. This is the part that takes time because each one of these is individual. It's kind of like when you do the business section, the hardest part is actually learning about the different types of businesses and what a business actually is. Most people don't realize that's the hardest part of a business section of the EA.
A little concerned because this is the stuff that should be basic to us. And I thought that the consultant exam was going to be harder.
No, actually it's not that hard. The problem is what most people get confused on are the Oregon section, and that's the stuff that we're going to spend the most time on at the end. We're actually going to get through this fairly quickly. We're going to get through most of this in 2 weeks. We're going to spend the most of the section on the Oregon section.
Yeah, Oregon's got some stuff. I like to throw those in there during my tax interview just to make people laugh.
Because the hardest part is actually the Oregon stuff. That's where we get that most of the questions are based on Oregon. They do that intentionally. And that's where we have to spend the most time. The problem is in this is there's a couple of sections. That's why I'm covering this in some detail, because what we have is on this, there are 2 things where the most of the stuff is missed. And that's in the head of household and the actual dependent children. What dependents are and what head of households actually are. So, and the other part is what is actually required for filing statuses, and that sort of thing. That's why I'm covering it.
Which is what we were covering today, what is required.
That is correct. Of that, the other stuff that's hard is basis, depreciation, and rentals and sales. So that's where we'll be focusing. So don't worry, because basically we're not going to be covering a whole lot on married filing jointly and married filing separately. I don't think, I would hope you guys understand those. So.
Okay.
We see most of the people have a problem understanding because there are several questions on what income is. And where they get you is they actually ask several questions in regards to bartering and what fair market value is.
So are we meeting tomorrow or waiting?
Actually, what I'm hearing is you guys are...
Well, I don't have to leave until like 5 or 5:30. I mean, it's not like...
I'm not going. I thought we were talking about the thing next week.
Okay. Well, the only thing is because I have something tomorrow, but I'm actually going to be recording it on Saturday to make up for it. I was going to have a session on Saturday.
Well, I have this retreat this weekend. I can't be here Saturday.
Oh no, that's fine.
And I'm probably not going to be here on Friday.
Okay. Well, that's fine. What I'm going to do is